If you want to be a successful Forex trader, you must prepare to be. You must set aside time every single day in order to study the charts, backtest the charts, forward test the charts in order to be confident in your trading strategy. You also must analyze the charts every single week prior to the market opening. You have to know where you want to trade, which pairs you're looking to trade for that week, and why. In this video, I'm going to show you guys how I analyze the market every single week to get an idea of what trade opportunities may come my way. I'm going to show you guys how I look for the best potential setups and why I'm looking to enter into the trade. This video will surely give you guys a new perspective on how you look for daily trade opportunities in the Forex market. Now, when you're doing your weekly analysis, looking for your potential trade opportunities in the market for that week, keep in mind the most important time frame is and will always be the daily time frame. The reason why the daily time frame is so good because the daily shows you immediate trend direction, and it also shows you the direction of the overall market. So let me explain to you what I mean immediate trend direction, or the difference between immediate trend direction and then the direction of the overall market. Okay, here's what I mean. If you look right here at the British pound JPY, right, this pair is known as the beast. The reason why it's known as the beast is because it's highly volatile, and once it makes a move, it moves a lot of pips, right? Take for example, this 1, 2, 3, 4, 5 day move right here was for 384.85 pips just alone. So on a weekly basis, this pair moves a lot. Okay, it's called the beast for a reason. But let me explain to you what I mean by immediate trend and overall trend. As you can see, the overall trend of this pair is down. It is down. So the overall trend of this pair is down. But price never moves straight down, right? Price is never going to move straight down. You always have what we call pullbacks. So pullbacks are the immediate trend, right? So you can be in a downtrend, but as you see right here, this price had 3 levels, 3 days of pullback, right? This is for the countertrend traders, right? Because there's a lot of money to be made in these moves, but keep in mind, the moves are more riskier because they're not in the direction of the overall trend. So again, the difference of the immediate trend and overall trend. The overall trend tells you which way the market is moving overall or long term. The immediate trend shows you the pullbacks. Okay. Now, keep in mind, if you're looking for the weekly opportunities in the market, so essentially you're taking trades daily, the most important time frame is and will always be the daily time frame. Now, let's talk about why the 4-hour time frame is so important. Now, the 4-hour time frame is just as important as the daily, but the daily is a little bit more important. But the 4-hour is a very important time frame. The reason why the 4-hour is so important because the 4-hour, it allows you to see the price action or the movement of the market for the previous week. This will give you a good indication of where you would like to trade for the upcoming week, right? It tells you, it also confirms the trend direction of the daily, but it lets you see the pullbacks, and then you can take trades in the direction of the overall trend once the pullback has ended. Here's what I mean. So let's take a look at last week. This is the price action from last week, right? Price began to go down, which would be moving, or price would be trading in line with the overall trend, because we already established that the overall trend is down, right? But what the 4-hour allows you to do is to see the pullback a little bit more clearly, thus giving you an opportunity to trade the pullbacks in the market. That would be considered a counter trend trade. right? Then it also gives you the opportunity to see the reversal of the pullback as price begins to trade back in line with the overall trend of the market. Alrighty, so the previous week showed price coming down, bouncing off this level of support. It showed you the pullback, right? Now this is not hindsight trading right here. This is not hindsight trading because we already established, before the week even started, we already established that price was in a downtrend and we were looking for a setup to go short on the trade. Okay? So let's say we saw this pullback, and right here is where price gave us an entry to enter into the trade, right? After this candle, so we would have to actually be taking an entry on this candle right here. Let's go down to the 1 hour time frame to look at where we could have entered this trade on last week. So here is where price gave us the entry right here. Well, not gave us the entry, but gave us the signal to go short, right? We could have waited until price came out and pulled back into the level, gave us a pullback, which is giving us a better price to get in, or a discount on price, on our entry, I should say, a better price to get in. We always know if we're trading off the 1 hour time frame, your stop loss goes behind the swing high of the previous day, 63 pips, to make 63 pips to the downside. Okay. Now here's the cool thing about looking at the 4 hour time frame. Let me just go back to the 4 hour. If the price came up and gave you an entry, showed you this counter trend move, and then it gave you an entry to go back short again, to hop back in line with the continuation of the overall trend of the market, what you could have done, you could have placed a potential take profit here, because we know if we're going back into the direction of the overall trend of the market, the next level of support is here, because this is where price bounced. Here's why I say that. Because if you're trading on the 1 hour, let's go back to the 1 hour, we're taking our trades on the 1 hour, we automatically know that we're looking for price to go back down to this level here. So we can take a short trade here for this setup, this pullback setup. Here's another pullback setup. Here's another pullback setup. Here's another pullback setup. Here's a potential pullback setup that's lining up right now for the upcoming trading week, which I believe I'm going to take part in this trade, right? Now, we always know, again, the stop goes behind the previous swing high of the previous day, right here. The stop would have went behind this swing high for all of these pips. All right. So again, the most important time frame is the daily. Second most important time frame, I'm going to say the second most important time frame would be the 4 hour. Well, let me back up. Why is the daily the most important? Because it shows you overall trend and also immediate trend. Why is the 4 hour so important? The 4 hour shows you in detail which way the price moved for the previous week, to give you a good indication of where price may be moving for the upcoming week. It also shows you the detailed moves in those overall trends. So I should say it shows you the details of the immediate trend, so you can get back in line when the overall trend setup shows on the charts, to give you an opportunity to hop back into that market. And why is the 1 hour so important? Well, when you're day trading the market or you're taking trades throughout the week, you always want to set your stop loss behind the swing high or low of the previous day, depending on which direction you're trading. And also the 1 hour is so important because it gives you the best entries in the market when you're receiving your signals from the 4 hour time frame. So I don't want to make this video too long. So really quick, I'm going to go through some potential setups for the week. Let me hop over back to the 4 hour. So today is May 24th. It's around 4 p.m. Eastern Standard Time. The market usually opens around 5 p.m. Eastern Standard Time for me, so about an hour. So I'm looking at a potential setup on the British pound JPY to go short. I am also, let me check my paper here. I'm also looking at a potential setup on the AUD NZD, and I believe that is to go short as well. Let me bring that chart. Let me pull that chart. Where are we at? AUD NZD. Alrighty, so I'm looking for essentially the same thing. The market traded down. One push right here. Second push. I'm looking for another push down to this level right here. So this is my first support level. I'm looking to get down to here and then down to here, right? And I'm also looking at another trade setup on the EURUSD. Alrighty. So the EURUSD is also trading down. This is the 4-hour time frame, guys. Price touched these lows last week, coming into last week. Created a triple bottom. The previous week, boom. This is last week. This is last week, okay? This is the previous week, but the week before that, it created triple bottom, triple bottom, triple bottom. Price shot up. I'm looking for price to return back to either this level to this level here. Now, price may, and I hope price retraces back up first to give me a nice setup to go short, gain more pips that way, right? But so these are the potential trades that I'm looking for to go short. I'm looking at the EURUSD. I'm looking at the AUD NZD, and I'm looking at the beast, the British pound JPY. Always be patient, guys. Wait for the proper setup. The best trades are pullback entries where you can actually get a discount. So even though this price looks like it's ready to fall short here, I'm still going to wait for some sort of a pullback on the 1-hour time frame. I'm going to wait for some sort of a pullback so I can get the best entry possible. And the last thing I want to say, guys, is do not chase trades. If it doesn't give you a pullback and price just runs from here, let it go. There's always other trade opportunities. But I'm looking for a price to give me a pullback. It looks like it's starting to pull back now. So hopefully price will pull back either into this level right here, so I can continue to trade down, because on the daily and the 4-hour time frame, it tells me price wants to go down. Hey guys, if you got anything from this video, please like this video, share this video, and subscribe to this YouTube channel. I really appreciate it. Have a great trading week.